Hello and welcome to the Biz News Breakfast Briefing. I'm Lucy Ferreira for biznews.com. In today's show, we have highlights from an exclusive interview with Free Market Foundation founder Leon Lowe, explaining why he is leaving the once respected economic think tank that he founded in 1975. In these excerpts, we hear why SA's longtime voice for free enterprise has approached funders, requesting them to withdraw their financial support of the organization. You can find the full story on biznews.com. After that, we have the global news update from our partners, the FT in London. First up, though, it's Alec Hogg on the markets.
Thank you, Lucy. Good morning. It's Tuesday, the 26th of July. Yeah, pretty much as you were on the markets in the US last night. Bouncing around, the S&P 500 index finished slightly in the green, the Nasdaq Composite slightly in the red. So what's happening at the moment is that participants in the markets are not too sure what the Fed is going to do tomorrow. Remember, this is the Federal Reserve meeting. They get together to talk about where they're taking interest rates. We know that interest rates are going to be increased. There are still some people betting that it'll be up by 1 percentage point. Primarily, though, the view is that it'll be 0.75% higher. Now, we had some really good insight into what's going on from Kevin Lings in the interview that I did with him on Friday. Go and watch that on YouTube or listen to it on Biz News Radio, and you'll get an insight into what's happening in the US and indeed how the South African Reserve Bank is looking at things. And as Kevin explains, in fact, he'd actually came to us from the Reserve Bank where he'd spent a little bit of time finding out from them what was going on. He explained that in the US at the moment, the Federal Reserve and other central banks take their lead from the Fed is trying to front end the increase in interest rates with the anticipation that they will quickly bring inflation under control, and then next year they can start cutting rates again. This is a view that is now being shared increasingly around the world, and the Wall Street Journal this morning, indeed, has a story which talks about this, what it calls very unusual bet that's being made by traders in the US. But anyway, getting back to the markets overall, the bad news is that Walmart came out with financial results after the market closed, and investors hated it. They are trading, the shares are currently trading 10% lower. Now, Walmart is the biggest retailer in the world, certainly physical retailer in the world, and it gives us a good indication of what's happening in the United States to consumers there. It says that higher prices for food and for fuel is starting to hit consumer spending, and they're expecting it to be a pretty tough quarter coming up and not a very good quarter just behind it. The Walmart results had an impact on Amazon, which dropped 4% in after-hours trading. Amazon releases its results on Thursday, and there had been hope, certainly from people who are invested in tech shares, that Amazon would be able to, together with Apple, Alphabet, and Meta, which also report this week, give some kind of a support to the tech shares, which have been under enormous pressure, as you are well aware, over the last few months. Well, the news from Walmart seemed to weigh more heavily. Another area which got knocked quite badly last night is the gold stock Newmont. Its quarterly results were out. Remember, this is the company that is run by South African Mark Bristow. He's the chief executive. Well, its results came out and were very disappointing on the basis that their production is going to be lower than anticipated. The share price there dropped by 13%. The gold price itself is holding at its higher levels. It's trading at $1,726 an ounce, up by $2 on where it was on Friday. But that hasn't helped South African gold shares, which seem to have fallen in sympathy with what they saw from Newmont. Goldfields yesterday was down 6.5%, so was Harmony, and Anglo Gold down 5%. That's all on the Johannesburg Stock Exchange. We also saw an unusual drop by Bidvest, an industrial company here in South Africa, one of our majors. That was down by 3.5%. On the JSE, stocks that did do well were Telkom, which was up 6.5%. And surprise, surprise, other mining stocks, i.e. non-gold mining stocks, Anglo American and Kumba, were all up by more than 1%. The JSE overall yesterday, though, was 0.5% lower, dragged down by those gold stocks, and a generally soggy international picture at the moment. The Rand picked up 10 cents against the US dollar. It's at 16.74 this morning. Lost 3 cents against the pound at 20 rands and 22 cents, and picked up 6 cents against the euro, 17 rand and 13 cents. Bitcoin had a pretty rough day yesterday, lost about $700 a Bitcoin to $21,100, down 3.5%. The Brent crude price was up to $106.86, so it's comfortably above $100 a barrel. That's for oil, of course. And then the Geltec basket reacting to the Bitcoin decline, down by 5% this morning. That's 410 rands and 55 cents. Before we go, some not such good news for South African investors, given Naspers/Prosus' heavy investment in Tencent. News coming out of China is that Alibaba is going to switch its primary listing from New York, where it's been listed since 2014, to Hong Kong. And this is ahead of the concerns that China and America won't be able to come to an agreement where the Americans are demanding that its regulators get to see properly audited Chinese financial results. If the Americans pursue this to its logical conclusion, 250 Chinese companies that are listed in America would be delisted, and that would remove them from the most investable market in the world. Just to close off with, in Asia this morning, the Hang Seng in Hong Kong is up 1.5%. The Nikkei is flat, and the Shanghai index is up just under 1%.
And now for highlights from Alec Hogg's interview with Free Market Foundation founder Leon Lowe.
Now, one of our community's favorite people is with me in studio, Leon Lowe. Every time I talk to you, we get lots of interest in whether it's a podcast or a video. But my goodness, what have you been up to now? You sent a letter out last week, which I received on Friday, to say this organization that you co-founded in 1975, that you have been synonymous with for many years, is now on the wrong path. You are resigning as president, you are leaving as a member, and you're having a pretty tough time with the chairman and the executive director.
Yes, it goes back actually 3 or 4, even 5 years. And the history very briefly is that when I started querying issues of concern regarding finances, and I asked the bank for bank statements, they said, sorry, you're no longer an authorized signatory. I think it was about 3 years ago. And I said, what? I'm the CEO. Who decided this? The board? Who? No. So somebody who I presume wanted to hide something did that. I could not get bank statements. I was the boss, and I could not get bank statements from my own staff.
While you were still CEO of the Free Market Foundation.
CEO, information was withheld
That's
from me.
That's bizarre. How does that happen?
I mean, I could have brought a legal action had I had the resources. I could maybe even have used the FMF to bring the legal action. But that is the question. How does it happen? And of course, with all stories, there are 2 sides, 2 realities, 2 truths, and sometimes more. I'm not a binary person. And, that's an explanation I've never received. I've never been told who did it, why did they do it, by what authority did they do it, and other things.
Who's they?
The answer is I don't know, but it's a group that I call the coalition or the cabal, and they are somewhat secretive. In other words, I became involved much later. A group called Stratcom was formed, and the members were known. There was no secret.
Stratcom. It's like the old apartheid Stratcom.
Well,
what a crazy name.
The name came from a guy who was part of that.
Oh, glory.
And is a very well-known person I won't name now, but supposedly converted, but it's not clear. And he was proud of having been part of that. I didn't realize at the time that the name was the same. Then I thought, oh yes, of course, apartheid Stratcom, a pretty evil organization, to put it mildly. Anyway, their organization, which they call the Camp, is mysterious. Nobody knows who they are, but I think they're a sort of amorphous moving target. And again, I don't want to name names, but they include people who have been lengthy colleagues of mine, trusted colleagues. And just to give you one of many, many examples of where things were going off the rails and I found it more and more difficult to be part of what was happening, I walked into the office one day and there was a young man sitting there at a desk in an office. And I went in and introduced myself and said, "Hello, who are you?" And he said, "I work here." And I said, "What?" A qualified lawyer. By the way, the FMF is now full of lawyers, no economists, and it's meant to be an economic policy think tank. Another lawyer, and I said, "Who employed you?" And he told me. And I said, "But you employing somebody and incurring budget expenses without the CEO meeting the person? Was there a job search done? Did you publish it? Did you interview candidates?" No, he just liked this person. So I employed him.
So what now? You have relationships with funders who've been donating very, very, in fact, recently even more than ever. And you're now stepping away. Are you going to tell those funders to withdraw their support?
I have raised almost all the FMF's money over its 50 years, including the bigger sums that you're talking about more recently. And the first time the FMF has had any meaningful large capital. And I have to tell funders and members and you and the public that I believe the FMF has been corrupted and converted into an organization that, unless it's rescued, which is still my objective, I'm still keen to get it back to the ethos and the values and the principles, internal principles, no secrecy, openness, transparency. I will have to, where I was going was tell them, that was my fiduciary duty, my obligation, and I've already fulfilled that. And don't know what I'll do. I'll continue doing policy work, either independently.
But surely, Leon, right now, it's never been more important in the battle for ideas in South Africa on which direction the country is going to go to. Now, much of the free enterprise approach that you've championed at the Free Market Foundation is what appears around the world to be the right way to go forward, and certainly for this country where we've tried everything else and it hasn't worked. But now that you don't have that voice, are you going to be the new voice for it?
But if I stay there, I wouldn't have that voice either, because it's not what it now does.
My point is, the Free Market Foundation doesn't have that voice. Would you be creating that voice in some way?
So absolutely. I'm exploring all sorts of options. People have come forward, offered money to create a new authentic Free Market Foundation. But you're absolutely right. The one thing the country needs now is let's call it the old or authentic or real Free Market Foundation.
Leon Lowe, co-founder of the Free Market Foundation, soon to be ex-president and ex-member of the Free Market Foundation. I have a feeling we're going to be having more chats in future. I'm Alec Hogg from biznews.com.
Next up is the FT.
Good morning from the Financial Times. Today is Tuesday, July 26th, and this is your FT News Briefing. U.S. tech giants report earnings this week. We'll see how they're holding up in this economic environment. And a French satellite company is in talks to merge with a British rival. Investors were not impressed. And we'll look at why extreme heat affects city dwellers especially hard. I'm Jess Smith, in for Mark Filipino, and here's the news you need to start your day. It's a very different economy these days for U.S. tech companies. Earnings reports come out this week from the likes of Google, Amazon, and Apple, and they'll give a sense of how tech titans are faring as the boom times of the coronavirus pandemic fade. Here's our West Coast editor, Richard Waters.
This year, by comparison, just the year-over-year comparisons make it a much tougher time. But of course, there are so many other things going on in the world that are hitting these companies, and they're all going to come together to make this a real crunch quarter. The economy slowing down, everybody's very attentive to that, but we're seeing things like foreign exchange. The dollar is so strong, and the tech sector earns so much of its money overseas that for companies like Apple, this is going to be a real factor in slowing them down. And then just the state of the global supply chains. We're going to see this combination of events. They're going to turn what has been a red hot sector, and that's really no exaggeration. It was just incredible how fast they were growing, into a far more mundane set of big companies, and just how big that slowdown becomes, I think, is going to be really the key point.
Richard, are there any individual companies you're especially interested in?
So Facebook is really facing a turning point, in its own history. This could be the first quarter that we've ever seen Facebook's revenue decline year on year, and part of that is just the advertising market, which is slowing down tremendously. And Facebook, at the same time, is facing this huge shift in its business. Its audience is going to TikTok, to different types of video online. And Facebook is trying to pivot into a whole new type of company, partly through copying TikTok, partly through inventing, this thing they're calling the metaverse, whatever that is, some kind of more immersive 3D online experience. And so they're facing this big transition in their business at exactly the moment the market is slowing down, the advertising market. So, that really could be a moment for them.
That's our West Coast editor, Richard Waters. Russia yesterday said it will slash gas supplies through its largest pipeline to Germany to 20% of capacity. This comes after a similar dramatic reduction last month by Russia's state energy group Gazprom, and it further threatens Europe's energy supplies ahead of the winter. Also yesterday, an index of German business confidence fell to its lowest level in more than 2 years. It's the latest sign that Europe's largest economy is teetering on the brink of recession. The French satellite operator Utilsat has confirmed that it is in merger talks with British rival OneWeb. The idea of these two companies combining is to better compete against big players in the space industry, like Elon Musk's SpaceX. The FT's Arash Massoudi is following the talks. Hi, Arash.
Hello there.
So what would each of these companies get out of a merger?
For Utilsat, they get the chance of having a sort of potentially very interesting technology that sort of transforms them into a potentially higher growth play. For OneWeb, they get a company that's already publicly listed and has profits and the ability to raise capital to fund its enormous need for further investment for this growth to potentially, which is just a dream right now, to become a reality.
So yesterday, when news of this merger hit the headlines, Eutelsat's shares crashed nearly 20%. So clearly investors not too happy about this. I mean, what do you expect the reaction to be down the line?
So I would expect that before any deal is done, there's going to be complaints from shareholders. We already spoke to one top 15 shareholder who said this deal makes no sense. Eutelsat is profitable, it pays a dividend, and now it's going to basically pivot its strategy from a sort of low growth, stable business into a venture style bet on the future. So I don't think there's any guarantee that this merger is going to get there. That being said, I think it's an interesting attempt to try to finance OneWeb, because basically the UK government clearly is not willing to do that, and it would continue to have to find outside investors. So for OneWeb, this is the best possible deal that it can find. What it means for Eutelsat, it still remains to be seen.
We should mention that the British government bailed out OneWeb 2 years ago with a $500 million investment. Arash, what do UK officials make of these merger talks?
The UK government officials we've spoken to are pretty happy about the deal. They say it's a great win for Britain. They put $500 million into this company. They haven't lost any money. They were claiming at the weekend that they were up $100 million on paper from the investment. But after Eutelsat's shares fell on Monday, they're basically, those gains have been wiped out. But it's probably a good outcome because they clearly don't have a plan in the British government about sort of the space industry and sort of what they're going to do. And they were going to continue to get diluted every time OneWeb raised money because they were not willing to put money in. So it's probably a good outcome from the UK government perspective because it's no longer their problem. They'll have a sort of 10% stake or less in a board seat at this combined company if the deal happens. And whatever happens from there. And they can claim they have sort of special sovereignty over OneWeb and special rights and this kind of stuff. But for me, it's just another example of the schizophrenic nature of of life in the UK right now. It's a completely rudderless country without a strategy. Even the space issue is unresolved. I mean, they left the European Space Agency, which they had been a member of for decades, and don't have a plan now.
Arash Massoudi is the FT's corporate finance and deals editor. This summer has been really, really hot. All over the world, heat records have been broken. There have been wildfires and heat evacuations. And the hottest places, perhaps, are cities. Cities are especially vulnerable to this heat because of something called an urban heat island effect. The FT's climate reporter Camilla Hodgson explains.
Yeah, the urban heat island effect is a phenomenon by which all the very hard materials, concrete, tarmac, that sort of thing, that are crushed together in cities, retain the heat. They're often dark colors and they absorb the heat from the sun's rays. They retain that, and then it means that the city stays warmer than, for example, a rural close by area experiencing the same weather conditions would.
Camilla, is there anything cities can do about this?
It's a result of the way the built environment has been designed, so it's not very easy to fix sort of overnight. There are things that cities can do, like planting trees, creating more green spaces, parks and things, installing water fountains, that kind of thing. Things where the materials are not going to absorb heat in that same way. But if you think about, like, on a really hot day, how hot the cars on a parked street get, they're hotter than the air temperature. And you've got all this trapped, built up heat in these urban places. So the more that you can reduce those sorts of materials, metals and concrete and things, the better.
How does extreme heat affect people's ability to work?
There are all sorts of ways that it hits productivity. You can have workers who are sick, who get heat stroke or something similar and can't work. You can have people who are unable to get to work because, for example, the trains can't run because the lines are too hot and it's dangerous. This really affects outdoor workers. So people in the construction and agricultural sectors in particular, they might not be able to work the traditional hours that they have worked because it's just too hot. And also you can have people in buildings that don't have air conditioning struggling to focus. A paper by Vivid Economics, which is a consultancy, looked at productivity loss in the US specifically. And they said that the US could lose an average of $100 billion annually from reduced worker productivity due to heat stress. And they said that Texas was the most at-risk state due to a combination of the weather there and the proportion of outdoor workers.
That's the FT's climate reporter, Camilla Hodgson.
And that's all from the briefing for today. If you enjoyed this episode, please remember to like, subscribe, follow, and share wherever you like to listen. And remember that you can find this story and so much more on biznews.com.